What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 52. It's August the 22nd, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about our important levels that we have on the chart today. We just have one major level, and that is yesterday's closing price, and that's represented by this purple line up here at 34,530. So let's go ahead and get right into it. So as we come into the screenshot today, we were in a pretty strong downtrend during the pre-market hours. So I took a trade during that time and tried to capitalize off of that on trade number one. So I went short right here during a downtrend as prices came back to retest a previous low. So whenever you're in a downtrend, that's pretty much one of the most reliable strategies that you can use. Whenever you find a swing low during a downtrend, just go ahead and draw a level of support across that. And then as prices break back down below that level, just wait for prices to come back up, retest it. And then as soon as you see prices retest resistance and start to move away from it, that's when you want to short. And that works really well during a strong downtrend. So after that, that was my one trade that I took for the pre-market. And then I just wanted to wait for the market to open and see if the downtrend could continue. And if it did, I would look to take more short trades as the market continued on. So when the market opened, we did have a pretty strong sell-off, but pushed all the way back up to retest all of these levels of resistance that we didn't quite touch just yet. And whenever you have a strong downtrend, that's one thing I've actually started to notice, is that sometimes even though you might not come back to test some of those previous levels of resistance, somehow some way the market will find enough buyers to push prices all the way up to those levels, and then that's when the downtrend will resume. So that's pretty interesting that we see that happen today also. So once we push back up, we see prices pull back down, get back down below yesterday's closing price. And from that point, once they broke back down below it at 940, they never got back above it. And whenever you're looking at yesterday's closing price and you see that prices are having a tendency to stay below that price throughout the session, that tells you that more than likely it will be a downtrending day. So always keep that in mind when you're analyzing yesterday's closing price. If it's above it, more than likely it'll be an uptrend. If you're below it, more than likely it'll be a downtrend. Now, it's not always guaranteed to be that way, because there will be scenarios where you're so far below yesterday's closing price that the market starts a rally and it moves up by 100 or something points and still doesn't even come back to that. But when you're in the immediate vicinity of yesterday's closing price and you happen to be staying below it, think about a down move coming soon, especially if it's been a lot of selling going on prior to that level getting broken down below and seeing prices stay below it. So always keep that in mind too when it comes to yesterday's closing price. So once we break down below that, we formed one last higher low right here, but it was some good opportunity to trade within this. I'll say that much. And one thing I can also say is that sometimes, even though the trend might be strong one way, when you get a signal that tells you that the characteristics of the market is changing, you could still catch some pretty good scalps off of that. Now, in this scenario, I chose not to trade because I just saw that the downtrend was so strong. So I said, even though I do see my higher low setup right here, it would have worked if I would have took it and I would have been able to make some good profits. But I was like, look, the overall trend is down, so I'll just wait for that to resume. Now, if we were able to make another higher low coming off of this one right here and maybe break back above yesterday's closing price, I would have thought about going long. But I said, you know what, let me just stick with the trend, and that's what led me to trade number two. So I shorted here on trade number two as prices came back to retest the previous low, and my break even stop got hit, which is okay. And sometimes in a strong downtrend that will happen, because if you get in at that previous low, you'll see multiple attempts for the market to come back up and try and test that level. So if you have your break even stop right there, you might actually get stopped out before the move happens. And sometimes that's something you got to deal with, especially with the strategy that I use where you have a really tight break even stop. So that's just one of the things you got to roll with when it comes to this strategy, trade number two. So let's move on to trade number three. So right here, as prices came back up to retest what used to be a level of support, but now that is coming back up into that level, it should act as resistance. That's the reason that I went short on three. But I cut this trade early because one thing that you don't want to do in the market, no matter how strong the trend might be, you do not want to get in front of momentum like this. Notice how when we came and made this low after trade two, we had 1, 2, 3 candles to the upside that took us from about 475 back up to about 505. So a quick 30-point move. And whenever you see that much momentum where it's all green candles, no matter how strong you think the downtrend might be, you don't just want to jump in front of that momentum. Instead, you want to wait for a reaction around that price level. And then if you see prices drop back down below it, then you can think about taking that short trade again. So at trade 3, even though that was a good level to short from, I think I made the right decision by cutting that trade early, even though we see it would have worked. But just as a rule of thumb, you do not want to trade in front of momentum. Today was a day where it didn't cause a loss, but more likely than not, if you're trying to trade against momentum, it's probably not going to work out too well, not in most scenarios. So then on trade 4, after prices retested that level and gave me the reaction I was looking for, that's when I came in on the short trade right here. Only thing was, it was just like trade number 2 where my break even got hit. But in this scenario, my break even getting hit was actually something that protected me, because prices would have eventually moved all the way back up to retest what was once a little high over here from this red candle. So always respect your break evens. When you have a break even trade, don't look to get back in immediately. Just sit back and reevaluate and determine whether or not you should get back in, or if you shouldn't. Don't just automatically do it like that. So then that brings us to trades 4 and 5. So notice how after trade 4 got hit for break even, we actually created a higher low right here. So notice how prior to this, the first higher low that we created a little bit earlier was almost at the exact same level that this next higher low got created at. So that's not a coincidence by any means. That right there is telling us that all of the buyers, for whatever reason, are buying at this level, and they're supporting it for this one particular moment. It doesn't mean that the support would last forever, but for that specific time period, we see that the buyers are in control. So once I saw that higher low, I was like, okay, if this was the first one like we had over here, I wouldn't trade it. But since it was the second higher low within the span of 20 minutes, and we formed that higher low on the same level that we did from before when we formed a higher low, I said, okay, I feel comfortable taking this long trade. So that's what led me to going long at trades 5 and 6. Now this was actually pretty interesting, because a lot of the times when you have this higher low setup, prices will come back to retest that lowermost wick of that higher low, which would be this wick right here on this green candle. But notice how on today's scenario, when I placed my order right here, prices wicked all the way back down to the previous swing low and then bounce back up to actually come back and reclaim that level of support from the higher low, which was pretty interesting. That's one of the first times I've actually seen that. And on trade 5, since I went long right here at the support level, I did get stopped out when they came back all the way back down to resistance below, well, support below. But one of my rules that I've learned throughout experience is that if you have a good entry that trades in line with the trend, then it follows your everything that your trading plan entails for that one specific setup. If prices immediately stop you out and then immediately spike back through that entry price that you originally entered at, you take that trade again and you take it back up to your original profit target. So that's what I did at trades 5 and 6. Now it's kind of hard to see because all of this happened within like the span of maybe 20 seconds. So I had to move fast, but it's kind of hard to see. So make sure you go back to the live chart, the live trading session for today. It's in this playlist, trading my scalping strategy playlist, and it's also in the live section videos on my channel. Today is day 52. So go back and look at trades 5 and 6 so you can actually get a pretty good idea of how quickly things like this can happen. Because whenever prices spike back through your first entry, one of the things about this specific rule is that you got to be quick, because you're not going to have time to just sit there and think like, okay, it's back at my entry price. I feel like I should take it. By the time you get done saying that one sentence, the prices will already have moved away by however many points. So when you see this type of setup and you're following this rule, you got to be quick and you got to act fast every time. Don't hesitate. So after 5 and 6, we see prices come back up to retest the exit price that I got out for on trade 6 one last time, and then we finally broke back down below resistance. Okay, so once we broke back down below resistance, that was pretty much the seller stepping back in and saying, okay, time for a new leg of the downtrend. So we pushed down and created a new low for the day, pull back up and had a higher low get created right here. So once I saw the higher low, I said, okay, I respect the fact that the trend is strong to the downside, but I also respect the changing characteristics that the market is showing me. So I'm not necessarily looking to go long, but I'm definitely not looking to go short. I want to see what the market wants to really do right here. So I was leaning towards the short side and just looking for any signs of the seller starting to step back in. So once I saw this one candle to the upside that had a long tail candle wick, that at one point this candle was all green. So for them to not be able to close with that much strength showed me that the sellers really kind of took over right then and there. And if you look at where this candle, this wick comes back up to, let's follow it across. It comes back up to retest a previous level of support, which has now broken through, should act as resistance. So that pretty much follows along the same lines that we were using to trade on trade number 1, on trade number 2, and on trade number 4. Pretty much waiting for prices to come back up, retest the previous low, and then start to move away. So once I saw that candle, I was like, okay, sellers are stepping back in. So I said, once we get back down below this higher low setup, that's where I want to go short. And that's actually another thing that I learned like either last week or the week before, which was in a strong downtrend, you can still draw your higher low setup if you see that higher low start to form. But what you want to do is really play that higher low for a failure. You don't want to play that higher low and expect it to be successful on the long side. You want it to fail for the long traders. And once it gets back down below the support level for that higher low, and it comes back, retests that level that should now act as resistance, and it moves away, that's when you want to start to look for the short trade. So that's what I got into on trade number 7, and that was the logic I had behind that. So let's read the notes real quick. I shorted as prices came back to retest resistance. The only thing is I cut this trade way too early. This trade would have never hit my stop loss if I didn't cut it, but the higher low right here setup, that setup was kind of scaring me a little bit because I know how strong the higher lows can be, and sometimes when you come back to it, even if you have a long tail candle wick like this, it'll still bounce up. And I saw yesterday's closing price up here, so I'm like, maybe they're trying to shoot for the closing price one more time and then the downtrend can continue. So I was like, you know what, let me just get out of this trade. But if we go back to the notes, it says be willing to accept a loss when trading your best setups. And that's so important because sometimes in the market, the prices are not going to immediately do what you expect it to. But if you hold on and you have a good stop and you have a perfect entry, you're trading in line with the trend from the best possible levels, you just got to hold that trade no matter what. And it's like, look, I believe in this trade, and if I get stopped out on it, I'm willing to accept that loss because the potential of profitability on this trade is too great for me to not be able to participate. I got to hold on to it. So that's one of the biggest lessons I learned right there from trade 7. It's like, yeah, the market is going to, play around with you a little bit, but if you're getting in at the best possible levels and you're trading in line with the trend, you got to trust and believe in your setup and hold that bad boy. So that's what I learned right there on number 7. So after we see trade 7, that trade did work. We see prices come back, retest what was the lowest price for the day, and then we see prices push up on this candle right here near trade number 8. They came back up to retest this previous low, and as they moved away, I shorted right here at 8. But here's the thing, even if the trend might be super strong, you still got to respect your rules about not going short at the lows. No matter how appealing it may be, the market is going to give you all types of temptation, like, hey, look, why don't you short it from the lowest price? You know it's going down. Don't give into it. Always keep your entry at a higher price level. And what's interesting on this trade is that I actually had my short entry up here at 472, right below this previous low right here. So if I would have kept my order originally where it was, it would have got hit. But once I saw this green candle right here come back up, I think it came back up, if I'm not mistaken, it came back up to 71. So I was like, okay, it came back to 1 point within my entry. Let me go ahead and take that as prices start to move away before I miss the move. But that comes back to what I talked about this weekend on my video about not buying the lows of the move. The reason I buy the low the reason I short the low so much is because I believe that I'm going to miss out on the move, which is usually never the case. And even if you do miss out on the move, it's all good because the market is going to be moving all day and you'll have more opportunity down the line. So it's no real reason to feel obligated to jump into any specific trade. So just a quick refresher of that lesson right there on trade number 8. Short from higher prices, no matter what the scenario may be. So we come back on trade number 9 and actually break through that level. And that's another thing that I want to talk about. On trade 8, I shorted before this candle even was actually being able to close. So when you take a trade before a candle closes, you got to understand that the market could do more than what you expected, because the market might have done one thing while the candle was still forming, but if it closed significantly different from what you saw when you took that trade, you might have to reevaluate whether or not you should still be in that position. And that's one of the things I learned on trade 8 also. It's like, look, prices broke down below that level, but you want them to close below that level sometimes before you take that trade. And that's actually what I was able to do on 9. So on 9, once we actually broke back through it again and then closed below that level, I was like, okay, that's the perfect place for me to go short, because more than likely the downtrend should continue. And if it doesn't, I'm willing to take that loss again. So I went short right there on 9 as prices broke below support and then came back to retest it. So after trade 9 was closed, we pretty much formed a consolidation zone right here, just played around for a good little bit. And then when it comes to a consolidation zone, you have a lot of different ways that you can trade it. You can box this up where you take the swing high and, you take the swing low and the lower high. You create your zone in between those points and then extend it across and look to go short every time it comes back up into the top of the zone. Now, if you do it that way, you can either take profit at the bottom of the zone, or you can hold on to it expecting for the overall trend to continue and break out of that zone back down to the downside. So those are 2 ways you can play it right there. And then the third way that you can play it is you can wait for prices to form a lower high somewhere within the zone, and then that lower high should more than likely lead to a breakout below the zone. And then once that happens, you just wait for prices to come back, retest the previous level of support that should now be acting as resistance that the bottom of the zone was providing for us. And that's pretty much what I did on trade 10. I shorted here as prices broke out of the zone and then came back to retest resistance. So once you see that lower high and then a breakout out of the zone, you can pretty much feel free to go ahead and take those short trades. So after that, I decided to call it a day. Felt like overall my performance was pretty decent, man. I came in, I identified that the trend was down, and for the most part I did nothing but go short. The only time I went long is when I saw clear-cut signs that the buyers were in control for that one specific moment. So I did a good job of following the trend, trading with what I see and not what I think, and just following what's in front of me. I think the only thing I need to improve on though is still that concept of not buying at the lowest prices. Like trade 8, you can't do that. You cannot buy at the lowest prices. And then on trade 3, make sure that even though you feel like the trend might be strong, you still don't just want to trade at any specific level. You want to see the reaction first, and if you get the reaction that you like, then you can go ahead and start looking for your trades. So those are the things I need to clean up the most, but overall I think I did pretty good today. You know, I still got to work on those small mistakes, but that's definitely something that I can get better at, come back tomorrow and be a little bit more productive. So I appreciate you guys tuning in with me. I hope you learned a little bit more about different ways and different methods to trade downtrends. I'll be back again tomorrow, August 23rd, 2023 on Wednesday. That is Wednesday, right? I don't know. But until then, you guys, study hard, take it easy.